Hello everybody, what's going on? So today is a major milestone day for NIO. They are celebrating their 11th anniversary. And while anniversaries are nice, what matter to us is what it means for the stock price. This isn't just a birthday party, brothers. This anniversary makes the transition from an ambitious startup to a global automotive powerhouse nearing a million deliveries. And right now, all the key financial drivers are lining up for an absolute breakout. Stay tuned because I'm breaking down the three reasons why this 11-year mark is the ultimate bullish signal for the NIO stock. 11 years is a lifetime in the EV world, and NIO is proving they are built to last. They are now on the verge of hitting a mind boggling milestone 1 million cumulative deliveries. As of October, they were already past 913,000, with the millionth vehicle set to roll off the line any day now. Remember when they hit just 1,000 units? Even Elon Musk called it a tough milestone for an EV company. Now NIO is 10x that figure. This confirms their ability to scale, maintain quality in the premium segment, and conquer the initial manufacturing hurdles that kill most startups. The foundation is rock solid, but foundation only don't make the stock price pop. Growth does. The real story here is the pivot to the mass market dominance and profitability. We just saw that in third quarter they delivered a record 87,071 vehicles, a 40% jump year over year. That shows accelerating demand and operational excellence. But here is the immediate non negotiable catalyst. The entire market is waiting for the company to confirm its goal of achieving its first quarterly profit under non-GAAP standards in fourth quarter of this year. Hitting that milestone is the single biggest psychological barrier this stock need to clear. Once they prove they can be profitable, the institutional floodgate will open for them. And look at the multi-brand strategy, the addition of onward target the mass market, competing directly with Model Y, opening up massive volume potential. And Firefly is tackling the global small EV market with right-hand drive models already in production and heading to key international markets like Singapore, UK, Australia, and other European markets. This isn't just one car company anymore. It's a three-pronged automotive ecosystem built for scale and global reach. So, what does this 11th anniversary rally represent us as investors? It represents the end of the risky growth phase and the beginning of profitable scale phase. We have the volume, we have the record deliveries, we have the new sub-brand addressing every major market segment, and we have the imminent catalyst of that fourth quarter profitability report. If you were waiting for the right moment to get bullish on NIO, this is it. They have proven that they can survive. They have proven they can deliver. And now they are poised to prove they can print money. The future is bright. The product line is broad. And the stock is ready to move higher. So get ready for it. With that said, thank you so much for being here. See you in next one. Hello everybody, what's going on? So NIO just dropped their third quarter earning report, and I'm telling you this is the report that might mark the beginning of their long awaited turnaround. For years, the story around NIO has been high growth but deep losses. Well, this third quarter 2025 shows a massive shift towards the financial health. First, let's talk about the bottom line. NIO reported a net loss of RMB 3.48 billions, which on the surface sounds like a lot. But here's the kicker. That loss represents a staggering 31.2% reduction year over year. Losses are aggressively shrinking that financial hole, driven by significant cost control. Look at the expenses. R&D expenses dropped by 28% compared to the same quarter last year. This doesn't mean they stopped innovating. It means previous heavy investment cycles are maturing and they are now optimizing their research budget for maximum efficiency. This is exactly what analysts look for in a maturing growth company. Second important thing in that Q3 earning was the record deliveries and the margin boost. The real strength is in their operations. NIO delivered a record 87,071 vehicles in the quarter, a strong 40.7% jump from third quarter last year. This high volume is directly translating into better profitability metrics. The most important number for any automaker is their margins. New gross margin hit 13.9%. This is their highest margin since the second quarter of 2022. And their vehicle margin was even better at 14.7%. So, why does this matter? It shows that their cost reduction efforts, lowering material cost per vehicle and streamlining manufacturing, are paying off dramatically. They are successfully converting high sales volume into higher gross profit. And their fourth quarter guidance is even better. While the third quarter results were fantastic, what even more bullish is the outlook for the fourth quarter. NIO is guiding for a massive acceleration in the final quarter of the year. They expect to deliver between 120,000 to 125,000 vehicles in the fourth quarter. That is an expected year-over-year growth of up to 72%. This level of anticipated growth is not just incremental, it's a sign of strong demand pipeline and operational confidence, likely fueled by new model launches and expanding capacity. Apart from that, their total revenue is expected to follow that suit, soaring to between RMB 32.7 billion to RMB 34 billion. This massive revenue growth, coupled with their improving margin, set the stage for dramatic narrowing of losses, or maybe even a break even sooner than the market currently anticipated. However, the big question here is that what does all this mean for the stock? The third quarter 2025 earning report shows a company that is successfully transitioning from a capital incentive startup to an efficiently run high volume automaker. They have proven the demand with record deliveries. They have proven the cost control by dramatically shrinking R&D expenses. They have proven the profitability path by raising their gross margin to nearly 14%, with a phenomenal fourth quarter guidance projecting up to a 72% jump in deliveries. NIO is entering a phase of explosive, efficient growth. The market often undervalued company in this staggering stage. However, I believe these numbers validate the bull case. NIO is on the track to achieve sustainable profitability, and their current valuation may not fully reflect the operational leverage they have just demonstrated. Once the company will turn profitable, then market will re-rate the stock and we will see some good momentum in its stock price as well. So get ready for it.